Happy Friday, traders. It is 8 a.m. Chicago time on Friday, the 23rd of June, 2023. This is episode number 2489. Thanks for joining me this morning. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. First things first, it is Friday. It is Where Are You From Friday. Where are you located? This is a feature that I really like to have because it gives you a reason to participate. It gets everybody to type something in. Don't be afraid to tell us what city, state, country you are from, if that's applicable, or city and country, or city and province, or whatever. But we also invite you to also disclose your Twitter handle or Telegram or Instagram so that others can reach out. So please punch that in. We'd appreciate it. If you want to be contacted, just to use a social media tag for that. Please don't put in your email or phone number as it states on the screen. I'm going to come back to this later on and hit it again. If you've done it once, you don't need to do it again, but some people skip the beginning. So diving right into the conversion trading pre-market summary sheet. And by the way, take a moment to look at the live chat to see who's around you, and you can tag people. So let's say I want to talk to, I'm in Missouri, Springfield, Missouri, and I see Sam over here is in Springfield, Missouri. I just type the @Sam and it fills in the name and just say, hey, Sam, I'm in Springfield also. Let's get in touch. Here's my Twitter, Instagram, Telegram, whatever. A way to get in touch without emails and phone numbers, because those get harvested and you're going to get harassed. The conversion pre-market summary sheet, risk-off sentiment today. A lot of the indices are below 1%. The Dow, which has been relatively weaker, is actually holding up the best, which is interesting. 3M, having settled its lawsuit, is carrying that index. But overall, the market's in a risk-off posture. And that's where we stand this morning. As far as earnings, we just have CarMax. Nothing too dramatic there. I mean, an indication, CarMax is used as an indication of what the used car market looks like. CarMax actually beat their earnings by almost 50%. They came in at $1.16 versus 79 cents with $7.687 billion in revenue versus 7.53. So they beat the revenue number by 2%, but they beat the earnings number by almost 50%. That's a sign of efficiency there. More profit on the same or expected revenue. And then after the market today, there's nothing. What's the big news? Nothing. There's no big news. There's nothing going on, unfortunately. We have the flash. The biggest thing is the flash PMIs in Europe. In services manufacturing fell short of expectations, and that's resulting in growth expectations setback. That's the main macro kind of development. The across the board, I mean, Germany came in at 41 versus 43.5. Manufacturing and services came in at 54.1 versus 56.2. The prior's 57.2. The Eurozone manufacturing came in at 43.6 versus 44.8 expected. And the services PMI came in at 52.4, a whole 2 points, 2.1 points below the 54.5 expected. And so there's this kind of disinflationary thing going on, which is good for interest rates, but it's also bad for growth. So this is the key element. CPI to Japan, Malaysia, Singapore points to intensifying disinflationary pressure. Growth is the story. The market's starting to believe that the interest rate moves are causing a slowdown, and a slowdown, of course, is going to impact earnings and stocks, and it's going to impact valuations. And if valuations are going to be impacted, then the price of the stock has to reflect that, and it has to move down. And that's basically what we're seeing. That doesn't explain everything that's going on, but that's the big picture. Fed's Powell yesterday warned again of tighter banking regulation as a result of the banking failures earlier this year, SVB and so on. Um, and so bank stocks have been relatively weak. They're expecting the regulatory hammer to come down as a result of the just the mess that was created by those two banks. And in addition to that, as we have said earlier this week, the market moved quite a bit, quite fast, moved to 4,500 in the S&P, and it's really in a digestion phase. A lot of weak structures below us, and we're kind of cleaning that up very painfully and slowly. The crude is taking a much bigger hit than I'd expected. So my outlook for crude early in the week on Tuesday has just absolutely been crushed. So that was completely wrong, and crude is supposedly responding to this growth story, right? And just overall slowdown manufacturing and so on. Same with copper, very very important industrial metal. You can see it's 2.39% down today. Looking at the S&P, we have a multi-distribution profile. It was balanced until we decided to push down here about a half hour ago, something like that, 40 minutes ago, and we created a lower distribution, taking it from a B-shaped profile to a multi-distribution profile. The volume on the S&P is relatively strong, 221,000 contracts in the overnight session. At this point, we've seen 140, 150,000, something like that. So it's pretty heavy, and the range is quite heavy for this time of the day. Normally, we would expect somewhere between 15 and 18 points. We have 39.75. That didn't come out right. 39.75. And the overnight inventory is 95% short. 95% short this morning, meaning that 95% of that 222,000 occurred below yesterday's close. So compared to yesterday, the inventory is heavily short this morning. The point of control down at 4,400, 4,401. So value, price, all moving lower, or all being accepted lower. What's coming up ahead today? We do have the U.S. S&P manufacturing and services flash PMIs. So the same as Europe, we expect those. Those are likely to move us around. We get all three of those 15 minutes after the open, and then we're left with Fed's Mester at 1:40 today. Currently, Fed's Bostic speaking. Fed's Bullard spoke earlier. And that's really it. Fed's Panetta, ECB's Panetta is speaking currently as well. Okay, that's a lot, I know. Again, again, if you just got here, we are doing the where are you located. We haven't done this quite a while, probably a month or even longer. Do it every couple of weeks usually. Just type in what city, state, province, and country you're from. And if you want to share, type in your Instagram, Telegram, Twitter handle so that others in your area can reach out to you. If you want to reach out to someone in the list, just type at the @ symbol. Start typing their name as it's shown on the live chat, and YouTube will fill that in for you, and then your thing will be highlighted for that person. Whatever you typed will be highlighted for that person so they can see it if they want to respond. All right, let's get to Edge Pro X here. Edge Pro X. So here's the bigger picture. Look at that. We still have this gap We still have this acceptance. We've moved the point of control lower. Yesterday we had overlapping value, completely overlapping value, and the point of control still moved lower, lower price, lower highs. So we're one time framing down, as we talked about before. We're looking for this 43, um, for this 43.90 or 43.70 area, 43.70 to clean this runaway rally that we had over the last week and a half or so. That's the downside target. Yesterday we did push down into this 92 area right in here. We stopped at 93. And we're below that today. So we're opening in a gap today. We have a gap situation, and the question is, do we come back into the gap and regain the value area, or do we stay away? Yesterday's profile is relatively blunt. It looks balanced here. It looks balanced here on the TPO chart, but on the volume chart, it's relatively evenly distributed. We'll look at that in a minute. And yesterday's trading just held that all-important point of control, MC point of control, at 16. I'm getting good with these numbers. At 16, and we traded the bejesus out of it Wednesday. We traded the double bejesus out of it yesterday. We're opening below. So the expectation this morning, and hear me out, the expectation this morning is that I am going to look to sell any attempt back into that range. There is going to be a magnet here, so it has a caveat, but the expectation is this is likely to behave as resistance on the initial test. So I'm looking to sell anything into the 4100, 4401, all the way up to 4405. So 0105 sell zone. If it pushes through there, then it's likely to regain its prior VPOC, which is at 09, and back into the 16 again, and we're wrong. But initially, any response back into yesterday's range is likely to see resistance at the 4401 to 05, and then I expect it to turn around and make its way down into the 4370, and that would be the key trade of the day. The alternative, of course, is we open, we continue to push down because we do have an impulse down in the overnight session. We'll look at that in a minute. I expect it to finish the overnight low, which, by the way, yesterday we did start with a B-shaped profile. We immediately pushed higher. So it wouldn't shock me if we got the same thing on today's action. But we pushed lower. We push lower, we might push the overnight low, and then we get back into the range. If we push lower first, I'm going to lay off this. We may be able to get a scalp here at the 4400, 4401 to 4405, but overall it's not a structured trade anymore, and the target becomes the 16, as you might have guessed, the 16, but the key target becomes the gap to settle at 23. So that gives us, that's quite a bit of range, but it's inside of 1 day's range, which is 44 points. This gives us about 43 points worth of range. So doable, but that's basically scenario number 2. I bet most of you remember that I used to color these green for the primary scenario and like a kind of a fuchsia purple color for the second scenario, and you'd love for me to go back to doing that, but I'm being lazy. I should do that just to make it easier instead of doing it all in one color. But those are the two key scenarios. Is the expectation, is it expected that today potentially we end up with 100-point day to the downside or whatever? I'm going to tell you that there aren't any surprises to price in. So we are slowly pricing in a a reduction in growth. We're slowly pricing in these risk overhangs that we have, and so I'm not looking for surprises. The market is actually rotating in a very orderly way, difficult but orderly way. It is the summer. Uh, I bet you forgot that 2 days ago is the official start of summer in the northern hemisphere, official start of winter in the southern hemisphere. So we are in the middle of summer trading, but you can see that we are putting in very organized, very well organized, and thoroughly traded lower highs. And so this is a pretty well executed auction. What I am noticing is that the deceleration of the movement of VPOC is an important indication that very few people talk about. You could see that the slope on the lines connecting these that I just drew, maybe I could do a better job. So remember these scenarios. Remember the initial push back to 44.01 to '05, looking for a short there, looking for it to turn around, and as it clears the low, we are likely to have confirmation that'll provide further confirmation that's likely to run to 43.70. There's a lot of fuel in this MC point of control and these profiles to feed into 43.70. That's the primary scenario because we're gapping down. The secondary scenario is that we push lower, find a base. That base very likely to be in the 43.80, potentially 43.70, and then we're looking for this thing to turn around as soon as it gets back into yesterday's value. Then we're looking for it to go to 44.16 and 44.23. Those are the two scenarios. But if you follow, let me draw the point of control at the end of the day. Okay, so if you follow the slope of this line, the point of control, you'll see that as we move down into this MC point of control, we are accepting more and more. And so does it continue to do this and then start to move up? Because ultimately we haven't given up that much from the 4,500. We're still kind of digesting this rally. This is, to me, this is just a pullback so far in the bigger picture. Let's look at more detail here. So look at this profile from yesterday. You got Ogre over here with his big caveman club. This is the profile of yesterday. What this is it's really a balanced profile that is contested all the way through. So what you have is people fighting with their dollars all the way through the range. Let's give him a nostril here. All the way through the range, and what this means is that the auction was quite active throughout. So all the way up and down the range, we had participants buying and selling. The value area of this is actually valid because there is value in that. Both sides are fighting at each price and are participating pretty actively, very actively, in the price discovery process. What this is not telling us is that there's consensus, right? Because yesterday it pushed highs all the way into the close. It pushed highs into the cash close and the Globex close, and so the auction yesterday was incomplete. But then as soon as we opened basically at the high and came right off, and then never breached the mid of the range, which is this blue line. And now we're holding on. We're doing the classic kind of ride your VWAP down type of thing. The trend is clearly down. The sentiment is clearly risk off. And this is why anything in this range here, the overnight point of control, VWAP confluence all the way to 44.05, is a sell zone for me initially. So any push here is likely to even if we're wrong, if we sell short here, and this is not a recommendation to trade, I'm sharing my view, my plans on this. uh, any uh, any short here is very unlikely to run through and get your stop. The market, if your stop is triggered on this short, the market is likely to work very, very hard to get there, and that's exactly what we want. We want it so that if we're going to get stopped out, we want the market to make a huge effort. We want them to pay dearly for triggering our stops. So when you're taking trades and you impulsively put a trade on, the question you have to ask yourself is, at a minimum, have I made it difficult for the market to squeeze me out? And that's not by ignoring your stop or moving your stop or removing your stop. It's by placing your trade in an area where the market has to truly fight to push through. Okay, so here we are with a weak low in the ES. We don't have an LIS in the overnight session other than the 4400, which is the century figure, and that's where I'll be monitoring for any push up. If it's not able to buy immediately, then I'm watching for the health of the selling and are looking to lean on the sell side as soon as I see that the sellers are making pretty good progress, really good rotations to the sell side versus the buy side. Okay, bigger picture, just looking at how things are laying out here. Overall, pretty good. We've tested, retested multiple resistance levels that were put up. You can see where we pushed right back into this area yesterday. We ended up finishing right here. So these levels have been here a while. We spent a lot of time on top of the MC point of control from the entire breakout higher. And now we are way down here. So we've cleared this low volume node. We're in our next support area. And we're looking for this thing to get down into the 4370. So you can see the 4370 right here. So we've cleared this hill, and now we're expecting it to slide down into the base of this big mound into 4370. So that's the big number to watch below. And again, if we get above yesterday's point of control, which was at 4410, if we get above there, then I'm going to be shooting for the 4423 for the market to be unchanged. That's a low probability play in my opinion, historically speaking. It's a lot of detail, I know, but at least we're getting some movement. The NASDAQ continues to be the cleaner, clearer trade in my opinion. Just it's why are these here? Don't like that. Continues to be a cleaner, clearer trade. The NASDAQ ended up pushing up to our upper. This is a low volume node level up here that's been here a while as well in this 15 to 20 area, and it has moved away yesterday from its acceptance down at 15,100, and now we're below there. So we're starting where we started yesterday. We're in range in the NASDAQ. We are out of range in the ES. Remember that. They're not working the same way. The NASDAQ's a lot stronger. So we're in range. This leaves us vulnerable in the NASDAQ for a push higher, and this may drag the S&P. So we want to see this morning which one has control. Does the S&P get dragged by the NASDAQ back up because the NASDAQ's still within the realm of its balance, or does the S&P push the NQ down and out of range, out of yesterday's range? And then if that's the case, then the NQ is looking at 14,860 down in this area right here, which gives us quite quite a decent amount of room to the downside once we clear. So the trade here might be, chop, 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 trying really hard, chop, 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 and then finally falling through yesterday's low. Any pullback, looking to sell that against the 15,000, and then shooting for this 14,860 area. Good luck. I know it's a lot to digest, and I'm trying to cover a lot. But those are the plans for today. Make sure you have your own plan and your own price map. Do not trade without a price map. and then just your job is just to wait for the market to decide what it wants to do, and then uh, identify your risk, put the trade on, let the market decide what your trade's fate is. You do not control the trade's fate unless you interfere with it, which makes the whole thing, the exercise, pointless. Good luck, and I'll catch you tomorrow. Don't forget to hit the like button as you head out. And of course, if you're not a subscriber to the channel, please hit the subscribe button. It's free. It promotes the channel. The more followers on the channel there are, the more people discover it, and the more come to approach the market in a much more holistic way versus just relying on an indicator with some variable inputs and things like that. Look at the market as a big holistic body, like a human body, working in parts together. That's the important thing. And as soon as you get in tune with that, in my opinion, your results will dramatically improve. That's what I believe. Good luck. I'll catch you on Monday morning. Take care.